Major Ripple XRP update. SEC versus Ripple over? Huge price prediction for XRP. Cardano, huge news. Hello guys, welcome to our channel. Today in this video we are going to discuss the major update about the SEC versus Ripple lawsuit and the price prediction for XRP. But before we start, make sure you give this video a big thumbs up, and if you are new to the channel, don't forget to subscribe before leaving. Also hit that bell icon to get notified whenever we will upload a new video. For now, let's get back to the video straight away.
You want to win an iPhone 12, maybe a MacBook Pro. How about $500 cash? You decide. All you have to do is comment the secret hidden message somewhere in this video and leave a like on this video and subscribe to the channel so we can keep affording these giveaways.
The Securities and Exchange Commission, Ripple Labs, and the individual defendants have filed a joint motion requesting a deadline extension for fact discovery. This may come as a frustrating turn of events for all the stakeholders within the space, from XRP holders to digital asset exchanges to fintech firms, partners, and clients who want this lawsuit over as soon as possible. The motion asks the court to permit the SEC to conduct depositions of Garlinghouse and Larson after the close of the August 31st fact discovery deadline. The requested change in the lawsuit agenda would extend the current expert discovery deadline from October 15, 2021 to November 12, 2021. Both plaintiff and defendants are making such a request due to the unexpected illness of an attorney for one of the parties who is integral to the Larson deposition, and the intervening vacation schedules of other attorneys. Quote, accordingly, the parties respectfully request that the court, for good cause shown, allow them to conduct 2 depositions after the close of fact discovery on September 14th and September 20th, 2021. This is the party's first request to conduct depositions beyond the close of fact discovery, the motion stated. Quote, if the court denies Garlinghouse's and Larson's pending motions to dismiss, the court has provided that discovery between the SEC and the individual defendants may continue for another 120 days, end quote. The current lawsuit agenda, soon to be updated, had already seen fact discovery being extended by 60 days at the request of the SEC, despite Ripple's opposition. The motion to strike and motion to intervene are still pending, and the expert discovery deadline will be extended to November 12, 2021. In my experience, anyone who thinks this case is settling anytime soon should reconsider, said James K. Fallon, an attorney familiar with the case. In addition to the deadline extension request, the SEC v. Ripple lawsuit has a new update to its agenda. A telephone conference is scheduled for August 31st to discover the pending privilege dispute. Earlier this month, attorneys James K. Fallon and Jeremy Hogan discussed the likelihood of an earlier than expected settlement. In a recent motion filed by the SEC, the plaintiffs' counsel stated that, quote, there is no realistic prospect that the parties will fully resolve this case for several months, if not longer, end quote. The most recent events in the XRP lawsuit include Ripple attacking the SEC's contradictions using William Hinman's deposition. Ripple has filed its response to the SEC's opposition to defendants' motion to compel the production of internal and interagency documents. The SEC has been arguing privilege issues regarding its deliberative process on the nature of Bitcoin, Ether, and XRP should be enough to justify the refusal to hand over said documents, even though the judge insists on doing so. Ironically, it was found the same day that the Ripple counsel had confronted the SEC for deleting a portion of William Hinman's deposition transcript. Both parties are scrambling to resolve the complicated privilege issues for the handover of the SEC documents and the hardships to deliver Ripple's terabytes of Slack messages, which the defendant refuses to do. Everything must be straightened out before the end of August 3rd. As to the recently filed response by Ripple and its individual defendants, the letter summarized, quote, at issue here is the propriety of the SEC's blanket invocation of the deliberative process privilege, DPP. Yet, the SEC spends the bulk of its opposition relitigating the relevance of materials that the court has already found to be relevant and compelled to be produced. The SEC also continues to fight the legal standards that the court has already recognized to apply to the fair notice defense raised by Ripple and to the SEC aiding and abetting claims against the individual defendants. What the SEC does not, because it cannot defend, is its across-the-board assertion of the DPP. Instead, the SEC asks the court to trust it, order production of nothing, and look at nothing, notwithstanding the SEC's admission, buried in a footnote, that it improperly designated 40 documents as protected by the DPP when that privilege does not apply, the defendant stated. Not only the SEC's argument that the documents are irrelevant ignores the court's prior rulings, but the plaintiff ignores that the DPP is a qualified privilege and the SEC v. Ripple is an extraordinary case according to the letter. Prove its argument, Ripple cited the recent deposition of former director William Hinman. The SEC tries to pass off as a non-event, quote, squandered by defendants. But the opposition is true. The letter said, quote, merely by way of example, Mr. Hinman admitted that prior to him joining the SEC in 2017, but years into the alleged unregistered security offerings by Ripple, the application of the federal securities law to digital assets was, quote, new for everyone and, quote, no one knew a lot. He further admitted that he could not recall any specific work product generated at the time he joined the SEC relating to federal securities law and Bitcoin, Ether, or XRP, and did not, quote, think people had completely thought through all the ways the securities laws may apply to that activity. Ripple's letter reminded the court this testimony, the documents produced, and potentially the documents that should be produced in discovery as a result of the defendant's motion fatally undermined the SEC allegations that the individual defendants acted recklessly in failing to recognize Ripple's sales of XRP as an unregistered securities offering at that time. Securities law experts of Mr. Hinman's stature, to say nothing of the full commission, had not reached that conclusion themselves despite looking into the issue, Ripple argued. Ripple then doubled down on the issue, pointing out several instances in which the SEC contradicted its former officials and vice versa in public statements regarding the status of digital assets. Quote, notably, Mr. Hinman's testimony is refuted by the SEC's own communications to the public as late as October 2020, that the SEC had made no determination as to XRP's status, and the SEC's own filings in a case brought by XRP Holdings now seeking to intervene in this case, which stated that XRP's status under the securities laws is being litigated in this case, the defendant's counsel argued in the letter. Quote, Mr. Hinman's personal views as to XRP's status are dubious in any event given his testimony that not all of the factors laid out in Howey need to be met to be an investment contract. Jay Clayton, the former chair of the U.S. Securities and Exchange Commission, has joined Fireblocks as a member of its advisory board. Fireblocks is a crypto asset custodian which has secured the transfer of over $1 trillion in digital assets and has an insurance policy that covers assets in storage and transit. The firm has over 500 customers ranging from global banks to many of the largest crypto-native exchanges, lending desks, hedge funds, OTC desks, and market makers. Several top names within the industry are using Fireblocks service, including Revolut, BlockFi, Celsius, Prime Trust, Galaxy Digital, Genesis Trading, Crypto.com, and eToro. Mr. Clayton's appointment will help Fireblocks and its customers navigate evolving market and regulatory dynamics affecting development and deployment of solutions for emerging digital asset infrastructure, said the official statement. Michael Shaulov, CEO and co-founder of Fireblocks, said, Jay's insights on financial stability and security in financial markets is unparalleled. Fireblocks will greatly benefit from having Jay on the advisory board, giving his expertise on many aspects of the financial sector. Jay will help to advance further the safety and security of the Fireblocks infrastructure for capital markets participants and investors. Fireblocks has emerged as a leader in the evolving digital asset space. The scope of the company's vision to improve the digital asset infrastructure and security is extensive, said Jay Clayton. Quote, "I share Fireblocks' view that digital asset custody requires the same level of service as traditional custody, while also striving for better regulatory outcomes in security, certainty, and resiliency. I appreciate the company's commitment to improving all aspects of the custody and transfer ecosystem and the team's level of engagement with the industry incumbents who have robust legal and compliance infrastructures, as well as new entrants in the space. Jay Clayton has come under increased scrutiny over his handling of cryptocurrency issues while chairman of the SEC. Mr. Clayton declared that Bitcoin wasn't a security and its value rose. SEC's lawsuit against Ripple was filed at the end of Mr. Clayton's tenure at the commission. Once he left the SEC, Mr. Clayton joined One River Asset Management, a cryptocurrency hedge fund exclusively focused on Bitcoin and Ether. Those facts have led nonprofit Empower Oversight to launch an investigation of SEC officials, including Jay Clayton. The organization, which is dedicated to enhancing independent oversight of government and corporate wrongdoing, has submitted an FOIA Freedom of Information Act request to the SEC seeking communications between SEC officials and their current and former employers. In another episode of Bad Judgment, the SEC v. Ripple lawsuit has brought attention this week to the fact that the SEC was caught erasing documents relevant to the XRP case. Parts of the William Hinman deposition transcript have been disclosed in a brief. In it, Attorney Jeremy Hogan found two bombshells that can pave the way for a win in Ripple's fair notice defense. The lawsuit has put pressure on the XRP market, which has been blocked in the United States since the agency's complaint was filed in December 2020. Despite the anxiety involved, the lawsuit is likely to take several months, if not longer, according to the SEC. That's it for today, guys. We'll see you next time. Until then,